Well, we're all glad Dennis's birthday is finally over. We had a major celebration, but the reason I'm glad is I don't have to be nice to him anymore. I'm not going to baby him. He's 49 now. He's going to have to grow up a little bit. Christian's stepping in for me today, folks, but I just want to say hi, and we're going to be on the road. Hopefully, our trip home will be a little bit easier than our trip here. But everyone have a great day on PreMarket Prop. I'm going to try and make that closing bell. I'm going to try for sure Brent get there. Just wanted to thank you all for helping us with Dennis's birthday celebration. Roll that intro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Hey, Brent, could you roll that intro again, or make sure Dennis listens to it before?
I'll make sure Dennis listens to it.
Come on, Triple D. Come on here.
What's up?
Right.
Oh, the whole gang.
These
the whole
guys
gang,
kept me
all
up.
four of us.
You guys kept me up very late last night, way past my bedtime.
Joel's tired.
So I'm going to go need some coffee. But a couple things. Dennis, What are you wearing there?
What do you mean, what am I wearing? Oh.
This guy is clueless. What
Wear
is
this
that?
nice shirt. Joel bought me this shirt because he says I have to have a collared shirt on, and I never wear a collared shirt on the show. So he bought me this shirt, and he's like, now you have no excuse. My excuse is going to be when I don't wear the collared shirt tomorrow is that they probably lose, and I'm mad at them. So.
Well, did I buy you one collared shirt or two?
You bought me two. You bought me two different Oilers collared shirts. I have no excuse. I need to start wearing collared shirts on the show, he said. We have to look more professional. And these beer T-shirts that I wear all the time are not good enough. So that's where you're at. Christian always wears a nice collared shirt. Brent looks nice, but I'm in beer T-shirts. And he's like, it's not good enough. So he's bought me two Oilers collared shirts.
Okay. It's not.
So we're good to go.
I don't mind the T-shirts, but I mind when you wear the same one 2 to 3 days in a row.
Well, when you're in like a fast market, you don't shower and you don't change your T-shirts. That's what it is. You got to be, and you know what? It's good for the environment there too. I'm environmentally friendly there.
I went without the collar shirt because I got a road trip. And one more thing, Brentster, are you sure you're ready to go? You got everything and packed up? We'll leave at 9.
I think I'm all packed up and ready to go. Yes, Joel. But
really?
I am. It has been fun working here in Dennis's office.
Wait. You're sure you're packed up?
We got a good thing going on.
You sure?
What? I mean, I'm not totally packed up. Why? Oh yeah, I'm not. Yeah, okay, I'm not packed up yet.
Okay, Jesus, I got to take Christian. Great, good thing I don't have to babysit you too. Okay. These guys want to hear about the markets, folks. I'm going to hop. Christian, thanks for helping out yesterday. Thanks for helping out today. And I think I'll check a Tesla quote before I leave.
He's gone. That's Joel. Christian, it's back to me and you. Brent has went to the background here. So obviously S&P is a little bit weak here. Give us a rundown here, Christian.
Yeah, quick rundown for you. Basically, just in short, decent amount of red on the screen. Let's start with international markets. Hang Seng was down 1.4% last night. Shanghai was flat last night. European markets are mostly in the red. You got Euro Stocks 50 down about 0.9 of a percentage point. I've got crude up on the screen. Crude got a lot of attention yesterday. It did make about up 5% move. However, one thing I will note here is you're coming into a big technical level here in crude, 68.84. But a lot of people were the buzz yesterday was starting to look at maybe some energy stocks after that big move up in crude. But I think getting rejected at 68.80 there for now, that's a big level to watch. So perhaps we could talk a little bit about that rally yesterday in crude. Nat gas futures this morning, they are up about 2% this morning. Let's move over to copper. Copper basically has been moving sideways over the last week and a half in a range. That is just basically flat for the day. Gold catching a little bit of a lift this morning. Gold just continues to kind of consolidate up here. And that is up about 0.7 of a percentage point. Silver, which has also been in the headlines a lot with the move in silver that we've seen over the last week, consolidating a bit, down 10 tenths, down 1/10 of a percentage point this morning. Bonds, let's go over to bonds next. Bond futures are catching a little bit of a rally this morning, up 7/10 of a percentage point, trying to break out of the lower range. Still has a lot of work to do, but kind of feels like a little bit of a risk off feel to the market this morning. So nice move in bonds.
Yeah.
Reminder that you have a 30-year bond auction today at 1 o'clock, along with some economics for you that we're going to preview at 8:30 this morning. Finally, Bitcoin futures. Well, not so finally, because I'll come back to S&P futures in a minute, but a little bit of a down move there. So again, as I mentioned, risk off feel this morning. Bitcoin down 1.9% and also adding to that risk off feel. S&P futures were down 0.6 of a percentage point. So moving a bit lower. NASDAQ futures, right around the same, down 0.6 of a percentage point as well. And then finally, Russell futures, big rejection at the 200-day moving average yesterday. They're down 1.1%. Hell of a reversal yesterday in small caps, which were up 1.5% after the CPI numbers and really reversed yesterday. So yes, good morning, guys. How's everybody doing? Again, Dennis, T+1 for your birthday celebration and big game tonight. What do you think?
Yeah, I know it is a big game tonight. I'm very nervous, and this Florida team's going to be really hard to beat. So we'll try to ignore the sports talk for a bit. At least I have one more day of hope until all hope is dashed if they lose tonight. Boeing, it's the bad news story of the day. Obviously, if you're just waking up and you didn't hear the news, there was a plane crash here. Flight 171, Air India has crashed. We don't know how many survivors. We know there was 242 people on board. It's been reported there's at least 30 people dead, but I think that number, unfortunately, is going to go up. The stock is getting hit really hard here in the pre-market. It's bouncing off the lows now, though. We were down as much as 17 or 18 points a little while ago. We're only down 13 here now. Also, General Electric makes parts. GE Aerospace makes parts for the Boeing planes, and also SPR, but SPR is being taken over. Spirit Aerosystems makes parts as well. That's actually being taken over by Boeing, but it's down 3.4% as well. Usually, was talking the stock, these are buy the dip opportunities, and Boeing has been moving higher. You get the snap back. You know, if you were short this thing, you're probably covering into it. And if you're looking to get long Boeing, people probably maybe potentially use this opportunity to get long, but it's a terrible tragedy there. So it's always tough to talk about making money and when you have a tragedy like this. But just from a stock trading perspective, there, it wouldn't surprise me if buy the dippers do emerge. I don't know if you want to come on day one or not, but Christian, what are your thoughts here, BA?
Yeah, I mean, horrible tragedy. It doesn't look particularly good. If you've seen the footage, I think the crash happened like right after takeoff, from what I'm understanding. So we don't have any details, and it's going to take a while, I would think, to kind of find out what the reason was. I heard that GE Aerospace is sending an investigative crew over to India to take a look. But this is a 787 Dreamliner aircraft. It says shortly after takeoff, 242 passengers and crew on board. Pilots issued a Mayday call immediately after takeoff, and the aircraft entered a slow descent before exploding into a fireball upon impact in a residential area. So there also might be tragedies on the ground. Heard that it crashed into some type of a building. So horrible, and horrible to hear that. So trading becomes secondary with this.
For sure.
I do have a position in Boeing. Trading does become secondary with this stuff. So, I would imagine that it's going to take days, maybe longer, to figure out what happened or what the cause is. Again, I hate to go over even the technicals here, but I think 200 psychological level to watch. Also watch one. I see support down at 194, but clearly this is going to affect a lot of things. I think even the airlines are down on this. You could see United,
Yeah,
for example.
AAL is down,
Yeah.
GAL is down, UAL is down. So yeah, most of the airlines are down a little bit on this as well. GE Engine in there, so GE Aerospace down 10 points here too. We don't know exactly what has happened. Like you said, it's going to take some time to probably figure it all out. But they're hitting all these stocks first and asking questions later. I mean, GE may be a stock too. It's been a stock that has been running. Aerospace, obviously, if they're at fault, maybe it's a different story. If they're not at fault, maybe you can get a relief pop out of that there too. You have a Boeing position, you said. What do you do in this case? I mean, this is a very unique case. Do you like just ignore the technicals for a second, or do you like just because it's taking out your stop, get out regardless? Like, what are your thoughts, just on how to trade something like this if you were to get caught and, long something like this?
Yeah, I'm watching 194. I mean, that is through my stop for now, so it gapped down. So I could either, try to basically watch to see what happens at my support level, which is 194, or I could just get out of it. I haven't done anything yet, so I'm just kind of watching to see if it's already down to very close to that support. So it could be a potential ad space. I haven't decided if I'm going to add down here. But I think also to your point, I think a lot of these things, again, each one is obviously particular with the casualties, but for the most part, they're usually, from a trading standpoint, they're usually buy the dip opportunities. So that's kind of what I think it's, again, like I don't want to say anything positive
Yeah.
here or
Yeah, I
negative,
know.
but
It's a tough,
um,
when you're doing a live show and you're trying to talk trading the stocks off of, tragedy like this, it's a really hard, thing to say.
y-
So
yeah,
I
and
think
like, yep, go ahead.
I was going to say, I think best thing for us to move on and not do a full, like stock analysis. But, I just say often these opportunities, not, it's not an opportunity, but often, these dips on these kind of movements, do often come back. So we'll just leave it at that. With the overall market here, we've seen, this S&P's run so far. It was interesting yesterday, and just maybe a little bit of macro talk here, because we had a couple pieces of good news. One, potential deal with China. Two, CPI number being light. S&P's in the morning ripped higher. It looked like we were off to the races. But then by the afternoon, we started to leak. And then in the afternoon, we really started to leak. We ended up closing down, and now we look and we're about 70 points off of yesterday's high. Is there that situation where, sell the rip is coming back into this market, Christian? I'd also argue, we had a few offerings. GameStop, which we know they're becoming, we can dump into the details on that, but GameStop, Oklo, INSM, HYMC, and Cloudflare, NET all did offerings as well. So those companies appear to be selling the rip on their own stocks. Is there a little bit of sell the rip mentality in Christian Fromhertz's ideas list here this morning?
Well, I generally wait for something to kind of change in the trend. And, I thought yesterday was like a sell the good news, and I think when that's a very psychological thing too, where there's good news on the tape and the market actually, does what it did yesterday, where it bounced it, and the move on the CPI number was larger than the move on the trade deal with China. So you had, like, I mentioned, as we got going this morning, that Russell futures were up about 1.5% yesterday, and they gave that all back and turned red yesterday. So that's a reverse. That's a just textbook reversal day, where you got good news on the tape, and the market took that and sold it. So, one day is not a trend, but I think that you have to be careful here, knowing that you had good news and the market sold off. And that means, I believe a lot of times, stock prices are pricing in, they've priced in some news already. And I think once you
Yeah.
get the good news and you sell off on good news, perhaps the market has already reflected that news. So yeah, I would watch your support levels, on your trades, and understand that we might be getting a short-term short-term change here. So we do have some more economics coming out in 15 minutes. That's the PPI
Yep.
number, weekly jobless claims, which seems to be more of a focus on that recently, where people are saying, hey, watch out for if the numbers start to creep up in the weekly number. So we've got that out in 15 minutes. PPI, they're looking for a similar number of what they looked for in terms of the CPI yesterday, plus 0.2%. So we'll get that in just about 15 minutes.
Yeah, Microsoft Spinner is saying in the chat, is this the new Apple motel? And what he means by that is Apple's been a hiding place because they have so much cash, and also because they feel like the cash flows, are more stable. It's almost traded as a staple. Asking Microsoft the same thing. There was a headline on Microsoft yesterday after the close. This was, I believe, from Business Insider, reporting that Microsoft has been potentially going to roll out AI Copilot for the Pentagon. Stock was up $4 last night on this. It has leaked some of those gains back, but Microsoft is indeed making a new all-time high here once again. Stock has been in full March mode. I mean, really, since the earnings, it was gap and ghost time here for Microsoft, and we're back here to all-time highs. It's good news, stock being up $2, and then the stock market's obviously down, is showing good relative strength here. It's off of that headline there. Thoughts here, Microsoft, Mr. Christian Fromhertz?
Yeah, I mean, relative strength. I mean, I kind of associate the names in the Mag 7. Microsoft doing good things, and in terms of positive announcements. And I just come back to earnings too. I mean, what really kind of flipped Microsoft was the positive earnings report. Since then, there was your gap up and on the earnings report, and things kind of switched. And like, I think it's got kind of important to look at this. I've been showing this chart quite a bit. The difference between Apple and Microsoft. Usually earnings or something other like a product announcement is a catalyst for change. Microsoft was not acting well for a while, going sideways, making lower highs. All the way from last summer. It made its high at 462, and it subsequently made a lower high at the end of the year last year. Lower high, lower high, lower high. What changes this? Earnings. Right. And that's the difference. And we see this time and time again where names that have strong earnings and talk about positive things on their earnings report, dips get bought, they begin to trend. The difference when you look at Apple, and I'm glad you're bringing up this point too, because I think a lot of people are, wondering what's going, noticing what's going on. You had a tweet out, I think, about Apple last night, right?
I don't remember what I tweeted. What did I say?
I think it was something like 480 companies have outperformed.
Oh yeah, I retweeted that. Yeah.
Have outperformed Apple this year, and I think this is to me is like there's some things that are difficult. There's some things that are hard in terms of technical analysis. This is an easy one, right?
Yeah.
So let me just freshen up my charts here for a minute, but this is just simple pattern of just lower highs. So just like I was saying with Microsoft, something needs to get the stock to reverse out of those lower highs. In Microsoft's case, it was earnings, right? And that was a big change in force. Apple made its high at the end of last year, and every time it tries to rally, it comes back and it makes a lower high. So I will basically wait for something to change. Like, again, sometimes it's like something that they're coming out with, a new product. Sometimes it's an earnings report. Could have been their developer conference, but
Sure.
this just continues to kind of make that technical pattern. And I don't think you touch it until it really kind of reverses there. Now, other than that, and again, I'm talking about more for like swing trading, like that's my time frame. There could be an opportunity here and there because Apple sometimes does act as like a risk off type play, where if there's bad news on the tape, something's really going on macro wise. Sometimes Apple, when that relationship very well, will act as a buffer. Any other thoughts that?
It trades like a staple. I mean, Apple's traded like a staple for a long time because the consumer, considers their iPhone to be a staple. It's something that they don't, necessarily, or it's something that they just need. I mean, everybody's got it, so it's traded as a staple for a long time with obviously stable cash flows too from that. It's just the valuations I've always struggled with, just because I don't feel like the growth is there, and we're trading 28, 29, 30 times. It feels like the growth story has just stalled tremendously, and we've been talking about this for a long time, saying there hasn't really been a lot of innovation there. And I mean, really, since Steve Jobs, it's been quiet on the innovation front from Apple. So that's where, I stand. I'm just out. I trade it every once in a while, and I do trade it from the defensive pocket, where sometimes, when the market's having a tough day, Apple can actually go higher. And we're actually seeing that again here this morning. Apple's trading up on a tougher day. So it trades more like a staple, and that's what I group it with, not so much technology companies anymore. I want to go back to the offerings a little bit here because, we glossed over just off the bat saying, some of these companies are selling the rip on their own stocks. It's absolutely what occurred in the case of Oklo. OKLO just going nuts yesterday, is up 30% here. So after hours, it gets the announcement. I'm sure if the company, and these companies are in cash burn situations, they're like, what a great opportunity for us to buffer our cash situation here a little bit. So Oklo comes out with an announcement just after 4 o'clock announcing a $400 million public stock offering that was at $426. And the stock is trading down significantly here, and the pre-market is down 6.59%. But I mean, really, when you look at it, this thing just, went up 30%, so it goes back 6 on an offering. I mean, these things, this nuclear trade has just ignited here once again. I don't think, NNE did an offering. We have precedents here. NNE did an offering about 3 weeks ago. Stock traded down from 35 down to under $30, has now come all the way back. So I don't know if I want to be out here on day one on Oklo. And again, where support is probably way down at 50 because it was a huge candle yesterday. But man, this nuclear trade just keeps on going here, Christian. Are you still playing any of these stocks? As the three ones that retail talks about a lot in this sector are Oklo, SMR, and NNE. Are any of those stocks on the Christian Fromhertz radar?
I do. I have some SMR on, but yeah, interesting. The timing. I think, kind of taking advantage of that. I don't think that's a huge surprise. I mean, the timing, of course, as soon as the stock was up that much. I mean, what an incredible move, up 30%. And again, it just shows these names. They just when there's positive news on them and there's short interest, it's pretty amazing. I mean, sometimes I just can't get over to how fast this market will move nowadays. I mean, this is a beautiful cup and handle type pattern, from a bullish chart pattern. Here's your cup, here's your handle, and boom, that's cup and handle pattern 101. And I think it will be interesting to see how far down this stock goes, and if it backs and how much it's going to back and fill. So you could see it's been continuing to kind of dribble lower here. But, this is also a proxy for momentum. So I don't really have a firm level to watch, but I wouldn't want to see it retrace, I would say 50% of the move. If it retraces about a quarter or a third of percent of the move, then it may hold in there. But I think if you're long this stock and you start to see it retrace more than 50%, then I would imagine if you were long it yesterday, you were taking some money off the table. But that's basically what I would watch. SMR, a lot of call activity in these names too. So SMR followed up, and it's also, even though it didn't have an offering, it's following it down. But again, just monster breakout in these. And this is, the tape has really loved the nuclear and the uranium stocks.
Yeah.
CCJ has been another name in this. Here's the uranium ETF. It's been incredible in terms of the rally that some of these names have had. So after that type of gigantic move yesterday, that's how I would kind of look for it. Watch how far the retracement goes. You certainly don't want to see a move back further than 50%, giving that back on the offering. So that's what I would be watching that group. And yeah, I'm still long a little bit of SMR.
GameStop does an offering to $1.75 billion convertible note. So it's a big one. We know GameStop has this whole new strategy of going to issue stock, or in this case, convertible notes, to buy Bitcoin. This is the MSTR strategy. It appears it's going to be the DJT strategy. There's probably going to be a dozen other companies doing the same thing because they've been rewarded for doing so. GameStop really coming in a lot here, though. It's getting hit significantly, 17%. I mean, it's a significant offering, though. So when you look at 1.75 billion and the market cap on GME, just doing the fun details, because sometimes this is a good exercise, the market cap is 12 billion. So you're talking about we'll just get the calculator out, and the market is pretty good at doing this kind of stuff. So you go 1.75 divided by 12. You're talking about a 14 to 15%, dilution here. Stock's down 16%. So potential dilution because it's obviously convertible note. So stock down 16% brings you down to, they're knocking that right out of it. That's the issue.
Yeah,
and we've seen this with MSTR over time where they do these offerings, stock gets hit, but then it eventually just comes back. And, they're Bitcoin leveraged plays. I don't know if they've started buying Bitcoin. I don't follow GameStop closely enough to know like at the prices what they're trying to get in at. But I mean, even, coming into the strategy and buying Bitcoin now, and Bitcoin is very close to all-time highs, doesn't seem like that great a strategy here either. I mean, if this is their big, huge idea and what they're going to use their well-known brand of GameStop for is just to buy Bitcoin, it kind of doesn't sound all that exciting. I did say, and I have said, 21 to 22 is huge support on this. Comes back down to that area. I'm probably interested here. I believe last time I looked, and I haven't updated it here, they had about $6.38 billion in cash. Now, they do have some debt too, so we got to consider that as well. And now they have some convertible debt here on top of it. So you got to think about that stuff. But there is some cash here. So, I mean, as it come down like the teens, it's probably getting close to what its cash holdings are. I don't think it's getting down all the way into the teens. Like, it seems like these guys get in front of it, these retail traders. But 21 to 22 looks like really good support for me.
Yeah, and another thing to kind of mention here is that GameStop did not go up on earnings. Like normally when you do one of these secondaries, or whether it's, you could maybe put a positive spin on it when the stock really rallies, just like we were talking about with Oklo, and they're taking advantage of this. This did not have a good earnings report reaction, and they've done this before when the stock goes up. But the fact that they're doing this when as the stock is going down, to me, is not a very good sign, regardless of like what they're using they are using the proceeds, it says, to buy Bitcoin. But I don't know. I'm shaking my head, and I don't know.
At what point in time does this strategy just get old? I mean, Michael Saylor has invented this strategy and it's so simplistic of, we're just going to sell stock and buy Bitcoin and sell stock and buy Bitcoin. And I mean, GameStop, MSTR, their underlying businesses really aren't even there. This is what they are. They're just leveraged plays on Bitcoin here now, especially, when they're going to sell convertible notes. At what point in time does the market just say, like, why am I going to the trouble to pay a premium for GME and MSTR when I can just go and buy Bitcoin myself? So right. I don't totally like I know, and DJT is talking about doing it now too. I mean, if the market continues to reward this behavior, we're going to see more companies do it. But at a certain point in time, I got to think the market just gets tired of this and says, well, this isn't even really, a business. It's just, a holding company for Bitcoin. So why are we paying a premium for the thing? So that's the long-term concern with owning MSTR and GME. Obviously, if Bitcoin goes higher and it's all Bitcoin, and we can follow, MSTR does it right on their site. They can follow you specifically, MSTR NAV versus the stock price. They update, I believe, almost every day. I'll go look today at it, which is actually nice that they do that. Yeah, Bitcoin NAV. So this is an MSTR. They've got the share price, which is updated as of yesterday. Yes, as of yesterday's close. Obviously, $387.11. They have 582,000 Bitcoins. So Bitcoin NAV is, I'm just looking, they got the market cap is 108 billion now for MSTR, but they only hold $62 billion worth of Bitcoin. So, I mean, you're paying, like, what is that? That's like a significant premium here to, and they have some debt too, obviously, but this is like significant. 62 billion in Bitcoin, but you're paying 108 billion for the 62 billion in Bitcoin. It's basically like coming in and buying Bitcoin like 180,000 or 190,000 for when it's trading at 111,000. It's kind of ridiculous, really, when you think about it. I mean, it's worked for Michael Saylor, but I don't know. If I want to buy Bitcoin, why not I just buy Bitcoin and I don't have to pay that huge premium? So if they were doing something like your utility, like making it better, and we're going to get PPI here in a second, so I'm going to go wide, but I don't know. I think this strategy could eventually just get old.
Yeah, I'm not I agree with you.
CPI
I don't
is
know what
coming.
they're doing, and like I said, I mean, I don't think that should be your catalyst for growing a company. But all right, here we go. We got economics going
Yeah.
down here. PPI
Sure.
comes out plus 0.1 versus expectations of 0.2%. So that is a lower number, just like we got for the CPI report. So the number for ex food and energy comes out the same, plus 1/10 of a percentage point. They were looking for 0.3. Initial jobless claims did tick up a little bit. That's 248 versus estimates of 242. Want to just give us the price action on this really quick, if you have
Yeah.
it?
Yeah, well, we're moving higher here. Obviously, we always look to TLT, because that bonds can move off these numbers sometimes more in stocks. We went up a little bit farther on TLT. We're up about 50 cents. We're up 90 cents now. So that's the good news. The PPI, being light is good news here as well. But this market kind of sold the rip yesterday, and we're not even getting much of a rip to sell on this today. And again, PPI is not looked at nearly as much as CPI. So it kind of almost feels like it's a nothing burger here. Definitely the rip not holding, though, as we're starting to leak right back down to where we were just trading a few minutes ago.
All right, excellent. That is it for economics for today. You got household change in net worth at 12 o'clock. And as I mentioned, you get a bond auction. You get a 30-year bond auction today at 1 p.m.
We've got a guest here early. Jim Tassoni is in the background and ready to go. So I think we might as well bring Jim into this conversation because we look like we're going to get a little bit macro here too. And Jim obviously can give us some color on that here. So run that intro there, Brentster. We'll bring in Jim Tassoni. Jim Tassoni, CEO, Armor Wealth Strategies, sitting back, watching the markets, watching PPI numbers come in. Are you banging on the keyboard? What are you doing there, Jim?
There hasn't been a lot of changes in our outlook in the last couple of weeks. Obviously wrong for, about a month and a half there. It was, at least as far as the U.S. market goes. But, like any trader does, you're when facts change, you got to change your opinions. And so we think, we're still in kind of this Goldilocks scenario where the market's just holding steady. It doesn't want to go lower. I think I said last week we did flip around and got a lot more risk on and got long around the 590 mark, 590.70 to be exact. It's not anything to write home about, but we see green on that trade and green on most of our trades that we've initiated since we kind of went more risk on, early in June.
So, Jim, I mean, this market has climbed this wall of worry, and we've seen, and maybe I'll take it international here for a second here, because, we've seen the U.S. markets come back substantially here, but this relentless, and I mean relentless international bid, like there hasn't even been very many dips. You look at the EFA, it hardly has a dip on that chart since April. I mean, we've had some pretty violent little dips as the S&Ps have come back, but EFA has not. EEM is kind of the same story. Emerging markets just been going straight up, 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 up. I mean, you can look at Canada, EWC. I mean, that's the smoothest, cleanest, and we got to show Christian's charts here. So I'm going to bring those back up to elevate the point here. But, you look at these ETFs, EWC, which is Canada, EEM, which is emerging markets in Asia, and then EFA, which is Europe. We're covering, the other continents here. It has just been steady as she goes. All these charts kind of look the same. Like, I mean, look at that EWC chart that Christian is showing. Just like straight up, like no pullbacks here. I mean, this, like, I was looking at this the other day and I'm like, this doesn't even seem like normal trading action, that there's just no dips here. Is this just relentless money moving into international? Like, why don't we even get dips on these markets anymore?
Yeah, I mean, I think we've gotten into sort of this situation if we look at from more of like a market structure standpoint. And this is, again, this is my thought watching the markets, looking at this. I think you had a lot of these pod shops, a lot of these huge hedge funds, things like that came into this year. And for years, it's been the easiest trade in the world, right? You go long the Mag 7 and you short everything else. And that's how you hedge. And they're making money on both sides. And it's been this winning trade. All of these managers were in it. And then we come into the early part of the year and that trade flipped. And we saw a lot of the big hedge funds, whether it's Millennium or any of the other ones, get hurt pretty bad early in the year. And then we have a situation now where that trade's flipped. And I truly believe once these firms are all for the most part Momo traders. They follow flows, they follow themes. And now you've got all these firms that have flipped that said, okay, after the last, whatever it's been, 15 years of US dominance, it may be time for international to shine, if not for the next 10 years, at least for the near term. And so I think you've got a lot of money flowing into this area and that money begets more money. The flows are heading that way. People think, okay, I've been told to be diversified my whole life. Now switching from the hedge funds to the retail guys. Now you've got the retail guys seeing this and saying, I've been told to be diversified my whole life. I haven't been, and it's been the right move, but maybe now's the time. And guys like you, me, and Christian, who've been around for a while, and we've talked about this before, there was a time when I got started in this business back in 2002, 2003, that international and emerging markets and small cap value was all anybody wanted. I mean, those were the areas for the first 10 years of my life. Nobody wanted large cap growth. You couldn't get someone to buy a large cap growth fund back then. And so are we heading into that? I don't know, but the flows are definitely heading that way. And I'll be completely honest, the international and emerging market trade, along with the gold trade, have been the reason that we've been able to perform relatively well this year, because we have not been great on the US side.
Yeah, and gold has been up too here. I mean, and it's coming back here as well. It's like, I just, it's like a little bit of mixed signals, I guess, with gold being as strong as it is, because you rarely see this market where, stocks are marching back to all-time highs. Usually gold is seen as defensive, and starting to sell off, and it hasn't rallied as much. But I mean, silver's been blasting off here. So it's like, money is like it's going into areas that it hasn't been going into, over the course of the last, like gold was dead money for a long time. I know in the last few years it's been better, but silver has been dead money for 20 years. And now it's starting to find money too. Is this just like an overall laggard theme here, Jim, where we're starting to see, money go into those areas which have underperformed over the last decade, and maybe that an overall laggard trade continues here?
I mean, I think there's a little bit of that. I mean, obviously we've seen, tech and the semis and some of these areas really start to perk up in the last handful of weeks. So there's still strength in kind of that momentum trade going on here. But to your point, I think there is some of that laggard. I think there's also, in a lot of people's and a lot of the big money, at least, mind, that we're seeing a bit of a regime switch here. I think there's areas like bonds, for example, that was seen as the safe haven really for the last 40 years, because we've been in this 40-year bond bull market where rates have just consistently crept lower all the way to when we went zero and even negative overseas. But now we're in a situation where rates have climbed up off the floor. They've come up off the mat. Whether or not they continue to tick higher is another conversation, but they've at least stabilized in this more reasonable range. And I think people are a little bit nervous with everything that's going on economically, geopolitically, administration-wise. I think they're a little worried about bonds as a safe haven. People still want those diversifiers in their portfolio. They still want what they see as hedges. And while it's not really hedging, it's more of a Texas hedge at this point. I think that's where the gold, and maybe even to a smaller extent, like your Bitcoin trade, are coming in as people look for something other than stocks to diversify in their portfolio. They're not so keen on bonds right now as they maybe used to be in that, I guess I'll call it that old school 60-40 mix. So maybe you're seeing more of a 60 stocks, 30 gold, 10 Bitcoin allocation going on now. That's just sort of what I'm seeing.
Hey, Jim, so we were talking, Dennis mentioned silver. You also have a heck of a move, and I was just bringing up the chart of what's been going on in platinum. And I know that you've been on top of some of these areas. And I believe, like, going back a couple months ago, you were looking at that Canada trade, which, can really move on commodities. So you got to move in platinum. I've been talking about these, and palladium is starting to move as well a bit, which I got long palladium the other day.
Yep.
Crude made a big move yesterday, and I think that caught a lot of people's attention yesterday, is whether you're now going to get maybe a move in crude. Are you making any adjustments here on some of these commodity moves, or how will is there anything that you're basically looking to adjust, either commodity wise or other? You've had some very good ideas with the Canada gold. I know that you were looking at Australia for a little bit, and these things have actually done. It's amazing because the timing. You could, if you're wrong for like a month, in the way that this market was going back in April, it kind of hurt you a little bit. But some of your ideas were really good. It was just the timing that was off a little bit, because I see Australia is also at highs. Are you looking to kind of change the strategy either on commodities or other?
No, I mean, we're now, I guess I would call it, the one thing about my trading strategy, our trading strategy here, is we're not afraid to have our spots, be wrong, get knocked out, and then re-enter. And that's what we've done on pretty much all of these trades as the trends have resumed. And so we're still long pretty much across the commodity space. We actually picked up, I'm looking at my trade blotter here. We picked up oil about a month ago. We got long the USO right at about 66. It was kind of just hanging there and now we blasted off. So that trade's looking decent at this point. But until we see a reason and the trend breaks, we'll continue to try these trades. It's all about risk reward for us. We know where we're going to exit. And we ride the trends until the trends break, in our opinion, especially on commodities. Stocks, we have a little bit more of a valuation component. We will look at some of the fundamentals. We're still overall chart driven, but we like to look at fundamentals. When it comes to commodities, I'm not a commodity expert on the fundamental side. So I go pure charts when it comes to the commodity markets. And that's kept us, for the most part, I mean, as you mentioned, there's been some hiccups, but that's kept us on the right side of most of those trades this year.
Jim, what about the dollar? Is this have an impact on all of these vehicles? Because, we got Brent tweeting out, and the US dollar has been, not doing well. Bloomberg dollar spot index falls to its lowest level since April of 2022. Is this just, and obviously some of these ETFs that we're even talking about, have currency effects in there as well. Is this with gold and silver, and is this just an anti-dollar trade maybe that we're seeing here too?
I think that's a big part of it. I think the commodity, the gold, the silver trade, the international trade, I think a big part of it is this extreme dollar weakness. And I mean, I'm looking at my charts here going back to like the end of last year, and the dollar is just fallen out of bed. I mean, it's down. Yeah. It looks like, north of 10% in 6 months. So that's a huge move in a currency like the dollar. And so I think that provides a tailwind for all of these areas. And whether that reverses or not remains to be seen, but it's kind of interesting to see the US market pick itself up off the mat after Liberation Day. The resumption of this tech trade, the resumption of all kind of the high flyers to an extent, and the dollar's still not able to get up off the mat. And I think that's why you're continuing to see that that bid in the international markets despite the strength in the U.S. markets.
Let's just talk tech stocks here before we let you go. I mean, the story kind of remains the same, where tech has been the best place to be. We're starting to see a few of the other laggards pick it up. Intel had a day the other day. Qualcomm starting to perk up, which has been a laggard as well. But I mean, stocks like Micron just charging higher here. The semis and the chips been charging higher. AMD has been charging higher. Nvidia is obviously not far from all-time highs here once again. I mean, let's just talk this AI trade for a second here. Is this just going to be the theme that's never going to go away here? And we're just like, we just got to buy all these stocks on dips. Are you still playing the AI stocks?
Yeah, I think it's a situation of time frame and time horizon. I think I think this is a theme that's going to play out over decades. And I think if you have that kind of time frame, you're a buy and hold on a handful of these. And, we flipped, like I said, risk on back a couple weeks ago now. I wish earlier, but we got into some of the stocks in like the SPHB, which is the high beta S&P. And that has done phenomenally well. That's been a good one. And so I think what you need here is, like you said, I think this is, if you're a shorter term trader, a swing trader, you look for entry points, you look for good risk reward setups. If this is your IRA, 401k, RSP in your case, Dennis, and you're able to get into and you're able to utilize individual stocks, I think this could be a buy. You find the best in breed and you buy and hold here. And so that's my opinion on these stocks. But yes, I think this is a theme that's in the early innings. I don't think AI is going anywhere anytime soon.
All right, Jim, I think we're going to wrap it here. Triple D said he was just having a little issue with his internet, so just hopping in here. Thanks for joining, Jim. As always, we love having you on Thursdays. I hope you have a good rest of your day, sir.
Thank you, guys. Take care.
Thanks, Jim.
All right, later.
Let's just move over to, I know we haven't covered big earnings report that came out last night, which is Oracle. So we got a nice move here in Oracle. It's right around the pre-market highs. Just to kind of go over the numbers really quickly. EPS 170 versus 163. Adjusted revenue 15.9 billion. Estimates 15.59 billion. A little bit of commentary here. Full year 2025 was a very good year, but we believe 2026 will be even better as our revenue growth rates will be dramatically higher, says Oracle CEO in a statement yesterday, and I think pretty well received from the analysts as well this morning. Couple price target raises this morning, a lot of outperform ratings on this stock. Jefferies price target to 220 from 200. Evercore price target to 215 from 180. Barclays 221 from 200. Oracle's results reinforce view of strengthening AI infrastructure demand. That comes from Bloomberg analysts as well. So you got a nice move here, and I know, I don't think we've, personally, I haven't been trading Oracle that much, but it actually ran into the report pretty nicely as well. So I'm wondering if this gets the software names, which have been a little bit dull recently. And when I say recently, just over the last week or two. Here's the chart for what I'm referring to is the ratio between SMH, semis, and software. So it's been more semis that have been leading the move over the last couple of weeks since the beginning of June. But maybe you start to see software kind of perk up a little bit.
Mm-hmm.
Is Dennis still there? That we could.
Dennis
I'll talk about
is gonna have to. Dennis is gonna have to restart his comp, but we do have earnings this evening out of Adobe and RH. If you kind of want to stick on software, Christian, obviously you might have an opportunity here. Adobe. Do you ever trade Adobe ahead of or after earnings?
I have not, just because it's been, we were looking at the chart of Apple before, and this has kind of got a similar theme going on. What I see in the Adobe chart here is just lower highs. So again, it'll be important to watch the earnings report for Adobe. Thanks for bringing that up. Because you need to see like a change in trend. You could also see that you got that big black line in here, 200-day moving average, and price below there decently. So something will have to change in terms of a catalyst for Adobe. Earnings reports can do that. So that's what I would be really paying attention to. Restoration Hardware, I didn't know that was reporting, but same thing. I was actually looking at Williams-Sonoma yesterday for that if there was going to be more of a rotation trade. This has really been has gotten dogged too. Even though it has a high short interest, so I think it will be something to watch in terms of earnings. And Restoration Hardware is more of a difficult one to trade on earnings. But so just wanted to mention, we've seen a little bit of a kick up here in the market after those PPI numbers. Just a couple technical levels that I'm watching for today for SPY. I would like to see us get above 600 spot 24 for SPY. For the Qs, which also getting a little bit of a move here, which I would say 531.77, also to pay attention to. IWM, I'm just going to cover this too, and I could also do a little bit of reviewing some tickers. So if you've got any charts that you guys want to go over as well, here's what IWM looks like. I mentioned big reversal yesterday, so we'll see if this can kind of grab a footing back. But Dennis is back. How you doing, Dennis?
Okay.
I
am. I don't know. My computer just decided to freeze up here. It's when I'm running too much. So sometimes IBKR is a huge resource hog here, and then I'm trying to stream. I'm trying to run the STN room. I'm trying to run a bunch of other trading programs. I'm just doing too much on it, so I just set that down. So hopefully you can hear me now. It just decided all of a sudden it couldn't handle it. Yeah, so, listening to what you were saying, obviously, we got a few earnings stocks there. And Oracle, I did want to go back and just comment Oracle. I mean, the expected move on this was 14 points. And, it got up there last night, then came down through it. The bar was high here, though. And it's very surprising, that this stock continued to go higher here, because we often see Oracle with a high bar, stock goes back down. But now you start thinking about all-time highs on Oracle. And it's always the ultimate buy the dip stock. I don't know in this case, because it's kind of pulled a fast one on us here, because usually it dips on earnings. So when it rips on earnings, I don't know what to say. So we'll see what happens with Oracle. Restoration Hardware, I wanted to comment on too. This is definitely a low bar here, Christian, with RH. It's down $2 in the pre-market. The expected move on this thing is 27 points. So it's a huge expected move for this stock. And you're talking about a stock that was $400 back in February, is down to $176. Higher end stuff, this expensive stuff that they sell in there. And I just wonder if the consumer isn't turned off on that a little bit. I know you were comparing with Williams-Sonoma, which is absolutely a great comparison here. Williams-Sonoma didn't have the greatest day yesterday. It's been off the highs as well, not as far as RH. I think the bar is lower here, but, I worry that, there's the potential this could actually go under the lower bar. So we'll see what 27-point expected move there. And then what were you going to ask me? You asked me a question there, and then I went on the segue.
Yeah, that's fine. I mean, I think a good point about the implied move for Restoration Hardware. This is not a stock that is usually one of those names that's a sleeper going into earnings. Like, for example, last earnings report, the stock fell 40%. The previous two quarters, the stock was up 17%, up 25%. So, it's the options are going to be very, very wide to try to play something like this. I agree, lower bar, but these stocks, and again, maybe if they say something positive, maybe you can get this group to get going. But this group has been very tough. Anything housing related, anything also like retail housing related. I'll just bring up the XHB ETF, which has more retail in it. Look at the candle on that yesterday. That's a
reversing.
That's a nasty bearish engulfing candle. As it had a little bit of a nice move from the lows over the last week, but the group really got thumped yesterday. I would also pay attention to what interest rates are doing. I know Jim talked a little bit about that we mentioned we've got the third bond auction this week. This is the big one. This is the 30-year bond auction, but TLT is making a nice move here pre-market. So I'll bring up the 30-year bond futures so that you can see the move. But you actually are trying to get to basically this week's highs here. So I would be looking for the possibility of further upside in bonds. And again, we'll get some clues off of that bond auction later today. But you could have it's almost a double bottom that could be materializing here. And been a lot of talk about positioning, how people might be on the wrong side of this, maybe expecting rates. One other thing I just wanted to mention too, I saw a headline out about the possibility of 2 rate cuts happening. Fed fund futures, we do have another Fed meeting coming up on Wednesday. The Fed is in a quiet period right now. It doesn't look like there's much of a chance that they're going to cut rates for next week. There's like a 1% chance, but you're starting to see those further out months creep up a little bit in the probabilities. July 30th will be the next meeting after that. 22% chance of a cut. And then when you get to September, now you're starting to really kind of price in the probability that the Fed might cut in September. Again, this has been pushed out. We've seen this for a bit where, the market starts to imply a cut and then backs off. But, I think it will be interesting if Powell says anything different come next week.
Yeah, I mean, we got a little bit of light inflation data. I think the story is going to remain the same, though, that they're going to say uncertainty with the tariff situation. I mean, we don't even know where the tariffs are going to land, so it's hard to just come in here when markets are all-time highs and start cutting rates like crazy because you think it's going to be inflationary. They're all about data dependent, and we haven't seen any, data yet, other than, that's a little bit light, but I just don't think that the Fed's going to change their stance here anytime soon. I know expectations we were looking. I still think there could be no cuts this year. There was actually only a 5% chance of that happening, though, when last time we looked at the Fed tool. So, I'm definitely on the outlier to say there's no cuts this year, but I don't think cuts are coming anytime soon. Ratings changes. We've got a few notable ones here. Datadog getting upgraded to outperform at Wolf Securities. DDOG, just jumping into the note here. They are raising to outperform with a $150 price target. They said we downgraded shares of Datadog back in February following an underwhelming 2025 growth expectations paired with uncertainty around a heavily concentrated AI native cohort, blah, da, 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 da. But now, at this time, we believe Datadog's market-leading products and ability to drive long-term growth, but also that things could be turbulent in the near term. Well, wait a second. This is so confusing. So they're talking about the negative that they downgraded back in February. Well, why are you upgrading it then now? Here it is. While after attending Dash in NYC, where the vibes were sky high with AI announcements aplenty, we are here to say we believe those turbulent times are in the rear view, and this dog isn't just hunting anymore, it's feasting. Our checks indicate that fears around the concentrated AI cohort dissipated following a key renewal, and that not only is consumption at that customer scale, but at least 17 of 50 top AI companies have reached out for names and are also customers here. So they're saying that it's in the rearview mirror, the reasons that they downgraded it, and they are upgrading it now to outperform with a $150 price target. I think the stock would have been up a lot more today on this note if we weren't down in the overall market, but it's starting to come back up here. It has also been in consolidation station here for the better part of a couple of weeks here. Christian Fromhertz, you interested in the Datadog?
I've been watching this stock a little bit. I have not pulled the trigger. It stopped right, again, like very simple technical analysis here. 200-day moving average. The thing just ran into the 200-day moving average and hung around there for a couple days, and a little bit of a rejection. Not moving too much off of that upgrade. So I would keep it simple. Watch the 200-day moving average, as that really kind of capped the price over the last few weeks. I would also say very interesting with upgrades and downgrades this morning. You only have a couple upgrades. I think I see like 3 or 4, and you got a whole bunch of downgrades this morning.
Yeah.
A few initiations. I thought a couple names that were in the news recently. Joby, which I saw mentioned in the chat a little bit
Sure.
earlier, gets a downgrade. Not the best looking candle yesterday for Joby. Some of these smaller cap names, the ACHR, the Joby. They've been and Rocket Labs I would also put in there too. Been a little
Sure.
bit difficult to kind of hold gains, but not really moving down that much. So Joby gets a downgrade. Also a name that was a high flyer yesterday, which was OUST.
Yep.
Also gets a downgrade this morning. I see, who was it this morning?
Tanner Fitzgerald downgraded. Also, West Park Capital downgrades it as well. So I guess they're using this as ring the register opportunities.
Yeah, I see a lot of that this morning. A lot of like downgrading on valuation, which I
Yeah.
don't, which, that's a logical, it's a logical, ratings change to basically come out and say, the stock's up a lot, we're going to downgrade it because it's ran too much. So I don't know if that really kind of takes enough out of these names. There's one other stock that I saw, which has been a hot stock recently that did get an initiation, and that is Sezzle. New outperform at Oppenheimer, price target 168. Stock has just been an absolute monster. Again, I was mentioning this earlier, and I talk a lot about this in terms of catalysts, but earnings are your catalyst. Stock jumped up on earnings up to $72. Again, one of those situations where not that many people owned it in terms of institutions, and they've been buying all the way up. Interesting that this stock sold off the other day, and I think that they were announcing a lawsuit against Shopify, and the stock sold off on that, but again, did not stay down for long. So I think this might be another, having a couple names like this to watch today. Nice price target of 168 with the stock trading around 130. So even if you've seen, you look and you see that type of move, they're looking for more upside movement.
What a vicious move 2 days ago. And the stock went from 131 down to 106 in the blink of an eye and then bought right back. I mean, so the buy the dip mentality is definitely still out there too. We can say as much as we're seeing a little bit of sell the rip in here. But I mean, on these stocks, Sezzle, the dip bought. And also even with Boeing this morning, Boeing was trading down at like 196, it's 203. General Electric was trading down 10 points. It's only down 5 points here now. So the buy the dip mentality is completely still alive and well. Even though we're seeing a little bit of sell the rip here too. So I think I'm going with that with my theme is just the fade trade is still back. Buying dips and selling rips seems to be working.
Sounds good. Well, that gets us to the end of the hour. So Dennis, hope that you're feeling okay after the big birthday celebration. And
I'm just worried about tonight. I mean, I'm just worried about tonight with the Oilers. I mean, it's so tough. Your team gets, this year, last year, and ends in pure disappointment. And now it looks like it's trying to go the same way here. And I'm like, oh, this Florida team is just too darn good. Bobrovsky is the biggest problem. That goalie is just really good. So they definitely have the better goalie, and that's a major issue here. So we will see. Tonight is a big game. Oilers win it tonight. They're right back in the series. Lose tonight, and it's pretty much over. So very important game here tonight. Christian, thanks again for coming on here. We will see you on Christian's Corner on the STN room at 2 o'clock. And I will go over to the STN room here right now with Brentster and Joel for a bet. And then, we'll be talking some trades, strategies over there. So join us in the STN room.
it was great. Have a great day, guys.